Welcome back to Real Conversations where we cut through the noise. I'm your host Ritukant Ojha and today we are tackling a big question. Can you, a non-resident without a residency visa in Dubai, actually get a home mortgage here? The short answer and the exciting one is a resounding yes. For many people, owning a piece of Dubai seems like a distant dream, especially if you don't live here full time. But Dubai has made it clear we welcome international investment. We want you to be part of our growth story. So, why Dubai? Beyond the stunning architecture and vibrant lifestyle, it is a smart financial move. We are talking about a place with no annual property tax, no capital gains tax when you sell, and no personal income tax on rental earnings. Now, think about that for a moment. That's a huge difference compared to most other major cities across the world. Plus, rental yields here are quite attractive, often between 7% to 10%. Dubai is a stable market with a strong economy and a secure land registry. So, all of this makes Dubai a compelling place to put your money. That too, if you are getting a mortgage. Now, while it is possible to get a mortgage as a non-resident, it is not same as getting a mortgage if you are a resident in Dubai. So guys, before we delve deeper, my humble request to you would be to please hit the subscribe button below and the bell icon next to it. If you find value in this video, please like and share it in your network. Feel free to drop a comment. It could be a question, your past experience, or simple hi. My production team will feel quite motivated if there is a engagement on this video. I read and respond to each comment. Now, let's come back to the core topic of today. So, for non-residents, the terms and requirements by the banks are slightly different and they are often a bit stricter. And that is what we are going to unpack today. So, we will cover everything you need to know from eligibility and finances to the step-by-step process and even what happens after you buy. It could be a longer video than you are used to watching on social media, but if you hear me out and keep some patience, this could be a game changer for buying a property in Dubai as a non-resident. So my request is please stick around because this is going to be a real conversation about making your Dubai property dream a reality. So first of all, you don't need a UAE residence visa to apply for a mortgage in Dubai. Trust me, this is a game changer for international investors. I'm repeating that. You might be wondering, how does that work? Do I need a special visa just to apply for a mortgage? And so on. I keep getting these questions from my investors. Now, let me address them one by one. So for the initial application steps, a standard a tourist visa or a short-term visit visa is usually fine. The banks here are looking at your financial standing, not your residency status in the UAE at that point. Now, Dubai's legal framework has supported foreign property ownership and financing for over 2 decades. This is not a new fleeting policy which is going to change in short term, right? It is a deliberate strategy to attract international capital and investors like you. Dubai wants to make it easy for people like you to invest, even if you are not physically living here. This approach helps solidify Dubai's position as a global investment hub. But, and this is important to remember, because you don't have that local residency, the banks here in Dubai see you as a slightly higher lending risk. This means they will ask for more proof of your financial strength and your stability. It is a trade-off. Accessibility comes with more thorough checks. So let's deep dive. What do banks look for? Let's break down the eligibility criteria. The number one is income. So this is the cornerstone. Banks need to see that you have a stable and verifiable income. So while exact numbers vary, most banks expect you to earn a minimum of a 15,000 to 20,000 dirhams per month. In US dollars, it will be around 4,200 to 4,500 US dollars per month. And in the Indian rupee, it will be somewhere around 3,000, 3,50,000 to 4 lakh rupees per month. It could be even more depending on the bank and your situation. For salaried individuals, the banks would like to see a steady employment record, usually for the past 2 years, along with recent pay slips and an official salary certificate, which is very important. Do note that the proof of stability is an important criteria for banks. However, if you are self-employed, the scrutiny is a bit higher. You will need to show a strong history of profitability, often with audited financial statements for the past 2 years, a business plan, and financial projections. They'll also ask for your trade license and company and bank statements. This might change and vary from bank to bank, but largely this is the scenario. The message here is very clear. Banks want to be sure your income is reliable. Next comes the employment history. Now, beyond just the income figure, banks care about how long you have been into your job, or if you're running a business, how long you've been running your business. The salaried employees usually need at least 6 months in their current role. For self-employed individuals, a profitable business history of at least 2 years is typical. Banks may have a preference for the applicants from well-established companies, or say MNCs, or government departments, as well, as they are seen as more secure income sources. Then there is age limit as well. So most banks require you to be between 21 and 65 years old when the loan matures. For self-employed individuals, some might extend that to 70 years as well. This means you need to plan your mortgage term carefully, especially if you are older, to make sure you meet the bank's requirements. A less obvious but important factor is nationality. Some banks have specific lists of eligible nationalities. If you are from a country they consider high risk, you might face more scrutiny or even restrictions. My advice would be to research it before applying, to save yourself from disappointment if the application is rejected. It has happened with some of my clients, and it's better that you do that due diligence early on in the process. And finally, credit history. This is a big one for non-residents. Being a non-resident, you of course would not have credit history in the UAE, which means the banks will look at your financial strength elsewhere. Now, banks will ask for credit reports from your home country. Some banks like HSBC, even the UAE's Al Etihad Credit Bureau, they work with global credit data providers like Nova Credit to access and translate your international credit history. The banks look at the patterns in your credit transactions and are one of the important considerations in the mortgage approval process, especially of the last 24 months. Your payment history and how much credit out of the total you are utilizing every month helps the bank assess your risk profile. For example, someone utilizing the full credit limit month on month could signal higher risk. The banks also look at the type of credit card usage, meaning what you are using the credit card for. Generally, banks are looking for a history of responsible borrowing. So, paying bills on time, managing debt well, and not having too many outstanding loans works in your favor. Unfortunately, if you have no verifiable credit history at all, whether local or international, it can be very difficult to qualify for this kind of a mortgage. So, maintaining a strong credit profile is something you should look at if taking a mortgage is part of your short-term or long-term plan in Dubai. Now, let's talk numbers. This is where the difference for non-residents become most apparent. The loan to value or LTV ratio is perhaps the biggest difference. While UAE residents can often get loans for up to 80% or 85% of the property's value, the non-residents typically get between 50% and 75%, with average being 60%. So this means as a non-resident, you will need a larger down payment. So you may have to provision for about 25% to 50% of the property value as your down payment. For off-plan properties, the ones still under construction, the down payment can be even higher, sometimes 50% or more upfront. This is because banks see an off plan property as a higher risk. So be prepared for a substantial upfront cash outlay if you choose to buy an off plan in Dubai as a non resident. Now, what about the interest rates? So, for non residents, these usually range from 4.5% to 6% annually. They are generally higher than what residents pay, often by about 0.5% to 2%. You will typically have two choices, fixed rate or variable rate. A fixed rate mortgage means your interest rate stays the same for a set period, usually 1 to 5 years. This gives you predictable monthly payments. After that fixed period, it usually switches to a variable rate. Now, if we talk about the variable rate mortgage, this type fluctuates with market conditions, meaning your payments can go up or down. Variable rates often start with a lower rate. The variable rates are linked to IBOR, which stands for the Emirates Interbank Offered Rate. This is the benchmark interest rate for lending between banks in the UAE. So, if IBOR goes up, your variable rate mortgage payments will likely go up too. Now, let us come to the loan tenure, right? So, while residents might get up to 25 years to repay their mortgage, non-residents are often offered shorter durations from 15 to 20 years. A shorter loan term also means higher monthly payments, but it also means that you pay off the loan faster, which is good. Banks do this to reduce their long-term risk with non-resident borrowers. To give you a quick comparison, think of it in these terms. Loan to value ratio, residents 80 to 85%, non-residents 50 to 75%. Down payments, residents 15% to 20%, non-residents 25% to 50%. Interest rates, non-residents pay 0.75% to 2% more than the residents. Loan tenure, non-residents often get shorter terms. Credit history, residents use UAE history, non-residents use home country credit reports. Minimum income, non-residents often face higher minimums. So now you have assessed your eligibility and understood the financial landscape. Now, what is next? The next comes the application process itself. So gathering your documents is step number 1, and it requires some careful work from your end. While specifics can vary by bank to bank, I'm sharing a general checklist which will be very helpful for you. First, of course, is your valid passport. Then the proof of your current residential address. For income, if you are salaried, a salary certificate and your last 3 to 6 months of pay slips. If you are self-employed, audited financial statements for the last 2 years, your trade license, your company bank statements. Personal bank statements for the last 6 months would be required to show your financial health and the transaction patterns, as I said earlier, and also to prove that you have enough funds ready for your down payment. That's something which bank will check. Now, you need to provide the details of any existing loans to the bank. And as we discussed earlier, a credit report from your home country will be required. In my experience of consulting clients, being organized here will save you a lot of time and frustration. Now, once you are ready with your documents, you need to generally upload it on a bank website, or in some cases, submit physical copies. And then comes the most crucial step of pre-approval. So you submit initial documents and the bank gives you a pre-approval letter. Simple. It is also known as the in-principle approval. It tells you the maximum loan amount you can borrow from that particular bank. Now, this can take anywhere between 10 to 14 days given that you are a non resident and these are working days. Now, you may ask why a pre approval is important. It gives you a clear budget for your property search, and it also shows sellers that you are a serious financially capable buyer. And in case you are considering a golden visa under the property investor category, it can be helpful to understand if you are crossing the 2 million threshold for the golden visa. Now, when it comes to choosing your lender, you have two options: going directly to a bank or using a mortgage broker. You can directly go to a bank if you know exactly what you need. Many major banks in Dubai like HSBC, Mashreq, Emirates NBD, and First Abu Dhabi Bank, and many others, they offer non-resident mortgages. Usually, the first touch point with these banks is very easy and online. And once you fill up the form, a bank employee gets in touch for the verification and explaining the next steps. The other option is using a broker, which is not uncommon in the UAE. If you are unsure or want to compare many options, a qualified mortgage broker could be very useful. Also, because as a non resident, sometimes the banking in UAE might feel overwhelming. These mortgage experts, they work with multiple banks and they can compare rates and terms for you. They also guide you through the complex paperwork and help you avoid common pitfalls like overpaying or missing or avoid missing any hidden cost. So typically they get a commission from the bank for every borrower that comes through them. So hiring them will not pinch you much financially. Now, in all of this, what often gets overlooked is the property selection itself. So, in Dubai, only freehold properties in designated areas qualify for non resident financing. Freehold means you own the property and the land it sits on indefinitely. Just remember that while off plan properties can be attractive for investment, many banks are pickier about financing them. So you will often need a higher down payment and you will need to buy from a bank approved developer. For example, once 50% payment is made, you can seek a mortgage on EMAR and some of the DAMAC properties as an example. If the project is in initial stages, getting the mortgage approved is very difficult. So please be smart and always ask upfront if a property is eligible for finance before you commit. Throughout this process, the role of your real estate advisor is quite crucial. He or she can help you navigate this complex process. I personally usually work closely with my client and help them start conversations with their preferred bank. Of course, there are a lot of doubts in your mind when you invest as a non-resident, and a good, knowledgeable property advisor can address them to help you build confidence. Some investors also hire qualified local lawyers to ensure their transaction complies with the UAE property laws. It's not necessary, but a lot of people do that. And it also helps them protect their interests. And if you're buying remotely, such lawyers can help you set up a power of attorney. The power of attorney allows your trusted representative to handle legal documents and transactions on your behalf. Now, this is especially helpful if you can't be physically present for every step, and if you are too busy, then I think hiring a lawyer makes sense. Now, moving on, once you choose your property, the bank will do a valuation. Banks do it to determine the property's fair market value. And just remember that your loan amount will be based on the bank's assessment and not the price that you have agreed to buy the property for. After valuation and all the criteria are met, you get the final loan approval. Then standard legal formalities and property registration are the next logical steps. All real estate transactions in Dubai must be registered with the Dubai Land Department or DLD. This includes signing the sales agreement, getting a no objection certificate from the developer and transferring ownership at the DLD. Your mortgage will also be registered at the DLD. Typically, your real estate advisor will ensure that everything is compliant and go through the entire and take you through the entire process. So you've got your mortgage, but what are the other costs that you need to factor in? So while Dubai has no annual property tax, no capital gains tax, and no inheritance tax, there are still fees to be paid. Let us look at the upfront transaction fees. The Dubai Land Department transfer fee is 4% of the property value, usually paid by the buyer. So on a 1 million dirham property, that's 40,000 dirhams. There's a title deed registration fee typically between 2,000 and 4,000 dirhams, plus an admin fee. If you use a real estate advisor, expect a 2% agency fee as well. For resale properties, there is a developer NOC fee which can range from 1,000 to 5,000 dirhams. Then, for the mortgage itself, a mortgage registration fee of 0.25% of the loan amount plus a valuation fee for the bank, usually 2,500 to 3,500 dirhams is required. The banks also charge processing fee, which is roughly around 0.5 to 1% of the loan amount. The loan protection insurance or mortgage life insurance is usually compulsory. And please don't forget that there will be ongoing property ownership cost as well. So service charges or maintenance fees which are charged like on an annual basis, they cover the building maintenance, security, and the common areas, gyms, swimming pools, etc. So they vary by community to community and different building sizes. So now if you hire a property manager for a rental, that is typically 5% to 10% of the annual rental income. There is also a very small fee for Ijari registration, which is for the annual rental contracts. And while it is optional, home insurance is always a good idea. I want to also touch upon currency exchange. If your income is in currency other than the UAE dirhams, which of course it will be because you're non-resident, remember that exchange rate fluctuations can impact your monthly mortgage payments, and this is something which is usually overlooked. Now, it can also impact the overall investment returns as well. And I will suggest that I will advise that you keep an eye on that as well. Now, the property ownership in Dubai, it comes with a huge perk, and that is residency visa. So if you buy a ready property for 750,000 dirhams or more, you qualify for a 2-year residency visa. If you invest 2 million dirhams or more in one or more freehold properties, you can apply for a 10-year golden visa. The golden visa is more flexible and can even apply to off-plan properties. I have created an entire episode on golden visa, and I will strongly advise you to watch that after this video. Now, both the 2-year and the 10-year visas allow you to live legally in Dubai, and you can often sponsor your family members. Okay, now moving on, what happens once you own the property, especially if you're not living in Dubai? So let's start with the rental income. So while Dubai has no personal income tax on rental income, if you are a citizen of a country with worldwide taxation, for example, United States, you still need to report that income to your home country's tax authorities. This is very important aspect. So for example, for US citizens, this means reporting it on your tax returns. But the good part is that you can usually deduct property related expenses, like mortgage interest, maintenance, and property management fees. You also need to be aware of foreign bank account reporting requirements if your rental income goes into a foreign account. Now, what about selling your property from abroad, right? So you can of course do it, and Dubai laws support this, and they are very flexible on this. The key is granting a power of attorney to a trusted local representative. Like it can be a real estate agent as well, or maybe a legal advisor. Now, this POA needs to be properly notarized and attested to be legally valid in the UAE. When you sell, remember that while Dubai does not have capital gains tax, your own home country might have it. So you will need to report any capital gains there. This is something which is missed by many of the investors, so be careful. For post purchase management, if you are an absentee owner, you can hire a property management company. It's very common in Dubai. They handle everything from finding tenants and collecting rent and managing the maintenance of the property. Trust me, this gives a tremendous peace of mind as a non resident. Now, before we wrap up, I want to discuss some uncomfortable truths. Look, I have discussed in detail about the path to your Dubai property dream through a mortgage. But let us be real for a moment. Not every journey is perfectly smooth. Sometimes things do not go as planned, especially if you're buying a property in Dubai as a non resident. And it is important to be prepared for those bumps in the road in this journey and this process. One common challenge that I have seen is delays. Now, paperwork can get held up, uh, valuations might take longer than expected, or banks might have a backlog, especially during peak season. In fact, even for the off plan properties, the developer timelines can shift. These delays can be very frustrating, but trust me, they are part of the process. I usually advise my clients to manage their expectations from the start and be ready for some unexpected delays. It's it's not common. Usually, it is very minor, but sometimes in some cases, it does go beyond your expectation. Another concern is about losing out on a good property. The investors outside UAE sometimes do not understand the fast pace of the Dubai market. If your mortgage approval hits a snag, that dream apartment might get snapped up by someone else with a ready money bag. And this is not uncommon, it happens. And this is why getting pre-approval before you start the journey is so important. It speeds up your offer process when the right property comes along. The next common problem that I see is not provisioning for additional funds. Seems a very small point, but people miss out on this as well. So sometimes the unexpected fee or higher costs can arise out of nowhere. Now, while I handhold the clients to manage the situation, it is always advisable not to keep the funds cut to cut and provision for some surprises. And sometimes these surprises do come. Now, just let me give you some examples. The property valuation might come lower than you anticipated, right? Which means you need a larger down payment from your pocket. Unforeseen administrative charges, right? You don't know. I mean, the developer can ask for some charge. Now, always have a small emergency fund, a financial buffer beyond just your down payment and planned fees. As I said, don't keep it cut to cut. Just keep a small buffer. Trust me, this will give you a peace of mind and flexibility and make the entire process more enjoyable. Okay, the next point is an emotional one. See, if a deal unfortunately falls through, which happens, please don't panic. Sometimes you see a property, fall in love with it, and because of some reason, you're not able to acquire it. Maybe the buyer changed his or her mind at the last stage, or there could be many reasons. It happens, and it's not the end of your property journey, is what I can say. It might mean reviewing your own strategy and also learning from the experience to find an even better opportunity to invest. I will suggest to stay in close communication with your real estate advisor. Trust me, all your advisors here are your best ally in navigating these situations and will help you find better options. Now, there's some practical insider advice that I would love to share. Now, it will help your journey become smoother, more enjoyable, and will also eliminate unwanted shocks. The first and foremost is choosing the right bank and your real estate advisor. Please do not be shy in asking the real estate advisor about their experience with non resident clients. What specific banks do they advise for your nationality? Now, there is a caveat here which I want to add before we move forward. See, securing finance for you is not your real estate agent's job. Neither would she or he get compensated for that effort. But it does help to have someone by your side who at least has the overall knowledge and can guide you in the right direction. So, when you speak to the banker, ask if there are any hidden charges. That's very important. Uh, uh, you can also ask if they are running any offers that can help you save some money. Maybe it's not upfront, and when you ask, then they will share it with you. Also, once you speak to a few banks, do compare their interest rates, fees, and their service levels. As a non-resident, you can perhaps gauge the service levels through their email correspondence, the quality of their email correspondence, how they speak on phone, the phone conversations you have with them, or if you happen to meet them face to face. Now, some banks are simply better geared for non-resident applications, and they also have dedicated specialists. So that's very important. So do that due diligence. Now let's revisit currency fluctuation risks. See, I have already touched upon this topic, but it is so important that I would like to re-emphasize. See, UAE dirham is pegged to the US dollars, and therefore it is considered a relatively stable currency. But most other currencies in the world are not as stable. Now, if your currency depreciates, your monthly outgo will technically go up. To manage it, I will advise you to consider opening a local UAE bank account as soon as possible. This will help you manage your funds in a much efficient way, and the monthly payments can be done using this account, and it reduces your risk and the operational challenges of moving the money in your currency to UAE. Also, beyond your real estate advisor and the bank, if you can speak to a reliable local lawyer through your network, even say just a 1 hour of conversation could go a long way in protecting you from costly mistakes. Though it's not necessary, but then if the property you are buying is of a higher amount, perhaps you can look at hiring a lawyer. Now, if you plan to rent out your property, finding a trusted property management company could be pretty useful. If you're looking for one, feel free to ping me and I will pass on some references. And see, as a non-resident, all these professionals I spoke about will be your eyes and ears on the ground, ensuring your investment is well looked after. Moving on, the next one that I would urge you to keep in mind is understand every document that you are going to sign, especially the sales purchase agreement or SPA. And when you are signing your mortgage document, please go through it. Go through the offer letter of mortgage. Don't hesitate to ask or feel shy, and ask for explanation if anything is unclear. Remember that it is your right as a customer. Now, another issue that some clients face is language barrier. Now, you might be interacting with an executive from a nationality where English is not the first language. Now, what could be normal for them may come across as rude to you and vice versa. Or it can sometimes lead to misunderstandings. If need be, it's a small tip that I will give you. Please ensure that wherever there is a confusion, it is translated in your language. There are a lot of free apps for language translation. Please use them. Now, the last part is, if you're serious about buying a property on mortgage in Dubai, please maintain impeccable financial hygiene in your home country. Keep your bank accounts active and well managed. Trust me, I'm repeating this point, but this is extremely important. Please ensure your home country credit score remains strong, as this is what UAE banks will assess. A little bit of financial discipline can help you secure a mortgage loan in Dubai at a low rate and help you buy your dream property. Now, before we wrap up, let's quickly touch upon which areas are better from a mortgage perspective. Generally, banks prefer properties in established, high demand, freehold areas. These areas offer a proven track record of rental demand and stable property values. While some are obvious, which everyone knows about them, like Dubai Marina, downtown Dubai, Business Bay, Palm Jumeirah, there are many dynamic areas that are seeing a lot of action right now and will see a high rental demand as well. So consider places like Jumeirah Village Circle or JVC, the Dubai Sports City, Arjan, Dubai Production City, Dubai Studio City, Dubai South, and even Al Furjan. Upcoming zones like Dubai Land Residence Complex or DLRC are gaining traction as well. These areas are increasingly becoming attractive for investors. They offer a good balance of affordability and strong rental markets. Going forward, they are expected to have stable property values as well and good long term growth potential. So please research these areas thoroughly, and this could be a smart move for investment and making them more appealing collateral for banks, right? Because banks will assess their risks, right? Now, they also have a proven track record of transactions, these areas, which simplifies valuation process when the valuation professional will actually go and assess it. So while it is possible to get mortgage in newer or less established areas, banks might offer lower mortgages or have stricter criteria, right? So research your preferred area carefully, of course, before falling in love with a particular property. Now, a quick tip for those considering furnishing the property and renting it out. There is a strong demand for furnished apartments in Dubai, especially for short term rentals. Now, this can command often higher rental yields, and that's why they are so popular in Dubai. But the furnishing costs can be significant. So don't ignore them. And you need to understand local rental laws, including Ijari registration. When you hand over your property for short term rentals, there usually is an inspection by the local authorities. Normally, the short term rental firm will take care of it, so don't worry about it, but be aware that this is the process. Now, managing tenants and maintenance from a distance can be more complex than you think. Uh, but this is where a good property management company becomes invaluable. In fact, a good broker will also help you manage your property. But we'll dive into the specifics of furnishing, tenant management, and maximizing your rental returns in a future episode. Otherwise, it will become too long. But for now, know and be aware that it is a popular and viable strategy here. So there you have it. Let me sum up the key takeaways. Securing a home mortgage in Dubai as a non-resident expat, even without a residency visa, is absolutely possible. It's a viable path to property ownership in one of the world's most dynamic cities. Dubai's world-class infrastructure, almost negligible crime rate, zero income tax policy, and attractive interest rates make it a compelling choice. But as we discussed, it does come with specific requirements, higher down payments, stricter income checks, and a need for a strong international credit history. See, the success in this journey comes down to thorough financial planning and meticulous document preparation. The smartest decision in this journey is to work with a trusted real estate advisor who can guide you through every step. I truly hope this conversation has given you a clear roadmap to understand how you can achieve your Dubai property dream. If you have more questions or if you are ready to take the next step, please visit my website ritukant.com or drop me a message on WhatsApp. The number is on your screen. Thanks for joining me and best of luck for your mortgage application. Thank you.